Welcome to Module 4, where we take a deeper dive into three critical areas that shape the future of nonprofit organizations: advanced fundraising, mergers, and compliance. We begin with advanced fundraising, exploring high-level strategies such as major gifts, capital campaigns, planned giving, and data-driven donor segmentation. These approaches help you unlock larger opportunities and build long-term sustainability. Next, we'll examine nonprofit mergers, a growing trend where organizations combine forces to strengthen their mission, expand reach, and improve operational efficiency. You'll learn what drives a successful merger and how to navigate the process with clarity and purpose. And finally, we'll cover compliance, an essential but often overlooked area. From legal obligations and donor privacy to financial transparency and ethical fundraising, we'll ensure you understand the key rules that protect your organization and build donor trust. This module is designed to prepare you for strategic growth, smarter fundraising, and long-term impact, all within a framework of responsibility and integrity, where we dive into several critical components that support long-term fundraising success and operational efficiency. We begin with planned giving, a strategic approach to securing future donations through wills, trusts, and estate planning. Next, we'll explore major gifts and how to manage high-value donors using a structured process known as moves management, which guides donors from first contact to major giving. We'll also cover the use of reply devices, tools that help track donor responses and improve conversion rates, and examine finder files and finder numbers, which are used to match responses to specific donor records. Then we move into finance with the four major nonprofit financial statements, helping you understand the financial health and accountability of your organization. On the data hygiene side, we'll look at NCOA, National Change of Address, and PCOA, Proprietary Change of Address processes to keep your donor database accurate. We'll also learn about merge and purge operations, essential for eliminating duplicates and ensuring clean, targeted mailing lists. The module includes how to conduct a file health report to assess the quality of your donor database, and wraps up with fundraising reports, where we track and evaluate campaign performance. Together, these topics will strengthen your understanding of donor development, data management, and reporting, all vital to successful fundraising operations. Let's get started. Planned giving is a powerful strategy for securing long-term funding and building lasting donor relationships. It involves gifts that require significant planning, often including deferred donations, charitable trusts, annuities, or bequests. These types of gifts are not immediate, but can have a profound and lasting impact on a nonprofit's mission. An effective planned giving program helps scale fundraising, deepens donor engagement, and contributes to long-term sustainability. So, what is a planned gift program? It's a structured approach to cultivating, supporting, and stewarding relationships with donors who are interested in leaving a lasting legacy. These programs guide donors through the often complex process of making a planned gift, while ensuring they feel valued, informed, and connected to the mission they care about. Educating supporters, offering personalized guidance, and building a strong sense of community are key to a successful planned giving strategy, one that empowers donors to make a meaningful and enduring difference. Let's go over some common planned giving terms that every nonprofit professional should understand. First, bequest intention. This refers to a donor's notification that they plan to make a planned gift in the future. While it's not legally binding, it gives your organization an idea of incoming legacy support. Next is bequest expectancy. This is an estimate of the future value of planned gifts based on your nonprofit's historical data. It helps in forecasting long-term revenue and planning ahead strategically. And finally, planned gift notification. This is the formal notice your organization receives when a planned gift is realized. The exact gift amount may not be known immediately, but it marks the transition from intention to impact. Understanding these terms ensures your team is well prepared to manage and nurture long-term donor relationships. Planned giving offers long-term support to nonprofits while providing financial and estate planning benefits to donors. Here are some common varieties of planned gifts. First, we have the charitable bequest, a donation made through a will or estate plan, allowing supporters to leave a legacy. Next is the charitable gift annuity, which provides the donor with fixed income payments for life in exchange for a future gift. Life insurance policies can be gifted by naming the nonprofit as a beneficiary or transferring ownership of the policy. Then there's the charitable remainder trust, a gift that provides income to the donor or beneficiaries for a set time, with the remainder going to the nonprofit. Retirement funds, such as IRAs or 401ks, can also be directed to charities, offering tax advantages to both the donor and the organization. Retained life estates allow donors to give real estate while continuing to live in and use the property during their lifetime. These planned giving options are powerful tools for building sustainable support and honoring donor intent for generations to come. Planned gift value assessments help nonprofits understand the true worth of future donations, especially those coming through wills, trusts, or other legacy giving. First, we consider the present value. This estimates the current worth of a future gift adjusted for time and interest. It's essential for accurate financial planning and forecasting. Next is fair market value, the price the asset would sell for on the open market. This is especially important for non-cash gifts like real estate, stocks, or collectibles. Finally, we assess the cost basis, the original value of the asset when it was acquired. This helps determine tax implications and potential capital gains if the asset is sold before being used. Together, these assessments ensure nonprofits can account for, report, and manage planned gifts with transparency and financial clarity. Acknowledging planned gifts is a powerful way to honor donors who've chosen to support your mission as part of their legacy. One impactful method is through donor recognition walls. These displays serve as a lasting tribute, especially when a planned gift is made through a will or trust. They offer a meaningful space where the donor's generosity is celebrated and remembered. For loved ones, these walls provide a place to visit, reflect, and witness the enduring impact of the donor's commitment. It's a way to say thank you, not just once, but for generations to come. Major gifts represent the largest donations an organization receives from a single source within a fiscal year. There's no universal threshold for what qualifies as a major gift. It depends on your organization's size, history, and typical donor base. For a long-established nonprofit, a major gift might mean $50,000 or more. For a newer or smaller organization, it could be $1,000 or even less. What matters most is the impact. Studies show that over 88% of a nonprofit's funds come from just 12% of donors. This means major gifts aren't just big donations. They are the financial foundation of your organization's success. Identifying, cultivating, and stewarding major donors is one of the most powerful strategies in nonprofit fundraising. Planned giving and major gifts represent two of the most impactful ways donors can support a nonprofit's long-term mission. It all begins with identification, recognizing individuals who have both the capacity and the interest to make significant contributions. Next is cultivation, building relationships with these potential donors through personalized engagement, updates, and meaningful conversations. Then comes solicitation, thoughtfully presenting the opportunity to give, whether through a major gift or a planned contribution, such as a bequest or legacy gift. Finally, there's stewardship, the ongoing process of showing appreciation, reporting impact, and maintaining a lasting relationship with your donors. When executed well, these 4 steps help turn supporters into lifelong partners in your mission. Major gifts come in many forms, each playing a significant role in advancing a nonprofit's mission. The most common is cash gifts, often given through checks, wire transfers, or online contributions, offering immediate impact and flexibility. Next are gifts of stock, which allow donors to contribute appreciated securities. These gifts often provide tax advantages while supporting the cause. Gifts of real estate involve donating property, such as homes, land, or commercial buildings, and can result in substantial funding for nonprofits. Planned or legacy gifts are part of a donor's long-term giving strategy, typically arranged through wills, trusts, or estate plans, ensuring future support for the organization. And finally, donor-advised funds allow donors to contribute to a charitable fund, receive an immediate tax benefit, and recommend grants over time. Understanding these types of major gifts helps organizations better recognize, steward, and cultivate high-impact donors. Launching a major gift program is one of the most impactful ways to fuel long-term growth in your nonprofit. Here are 7 essential steps to get started. Determine what major gifts look like for your organization. This varies by nonprofit. Define a clear dollar threshold that qualifies as a major gift for your team. Assign major giving team members. Designate staff or volunteers responsible for managing relationships and overseeing the process. Identify major gift prospects. Use data and research to find donors with both the capacity and interest to give at a higher level. Cultivate major gifts. Build genuine relationships through personalized communication, engagement, and trust. Ask for major gifts. When the time is right, make a thoughtful and strategic ask that aligns with the donor's values and interests. Thank major donors. Show sincere appreciation with timely, meaningful recognition that reflects their impact. Review major gift results. Evaluate outcomes regularly to improve your approach and strengthen future efforts. With these steps, your organization can build a sustainable pipeline of transformational giving. Moves management is a strategic approach to guiding donors through their giving journey. It involves planning personalized next steps based on each donor's current level of engagement, whether they're first-time givers or long-term supporters. While having a standardized system helps ensure consistency and efficiency, the real power lies in tailoring those moves to each donor's unique interests and behaviors. This personalized approach strengthens relationships and encourages lasting, meaningful support over time. The donor management lifecycle is a strategic journey that helps nonprofits build lasting relationships with their supporters. It includes 6 key stages. Acquisition. The first step is bringing new donors into your community through outreach, marketing, and engagement efforts. Cultivation. Once acquired, donors need to be nurtured. This involves building trust, sharing impact stories, and keeping them connected to your mission. Solicitation. At this stage, you invite donors to take action, typically by making a gift, through well-timed, personalized appeals. Stewardship. After giving, donors should feel appreciated. This includes thank you messages, reports, and showing them the impact of their support. Retention. Retaining donors is more cost-effective than acquiring new ones. Through consistent communication and value, you encourage continued giving. Upgrade. The final stage focuses on growing donor support over time, whether through larger gifts, recurring donations, or legacy giving. Together, these 6 stages form a complete life cycle that strengthens donor relationships and drives long-term fundraising success. The benefits of Moves Management fundraising extend far beyond just tracking donor activity. They shape long-term relationships and sustainable growth. By aligning your fundraising efforts with the donor management lifecycle and applying a structured Moves Management strategy, your nonprofit can unlock several key advantages. More successful fundraising asks. Because you're engaging donors at the right time with the right message. Improved donor retention rates by nurturing relationships consistently throughout their giving journey. Increased supporter loyalty, as personalized, intentional engagement builds deeper trust and connection. And most importantly, data-driven decision-making, using real insights to guide every interaction, ensuring no opportunity is missed. Moves Management turns one-time gifts into lasting partnerships, and donors into lifelong champions of your cause. Moves Management is a strategic approach to guiding potential donors through every stage of engagement, from first contact to long-term commitment. Here are the key steps in the process. Identify your target audience. Start by defining who you want to engage. Segment your audience based on giving potential, interests, and connection to your mission. Set SMART goals. Make your objectives specific, measurable, achievable, relevant, and time-bound. Clear goals provide direction and benchmarks for success. Get to know your donors. Build relationships by understanding donor motivations, communication preferences, and giving history. Choose your moves for each donor. Strategically plan actions or moves like calls, emails, meetings, or event invites that help deepen engagement at each stage. Track data and make adjustments. Use CRM tools to record interactions, monitor progress, and refine your approach based on results. Each step helps create a personalized, intentional journey that turns interest into impact and prospects into passionate supporters. In fundraising, a reply device, also known as a response device, is the form donors use to make a gift to your organization. It's usually included as a separate insert in a fundraising package, newsletter, or promotional mailing. An effective reply device is clear, concise, and easy to read. It should provide all the essential information a donor needs, such as gift amount options, payment methods, and contact details, making the donation process simple and seamless. A well-crafted reply device can significantly improve response rates and overall campaign success. A well-designed reply device is more than just a form. It's a vital part of the donation experience. First, it facilitates the donation process, making it easy and convenient for donors to give. It also includes essential information such as your organization's name, mailing address, payment instructions, and even notes on tax deductibility. Clarity is key. The design should be clear and concise, with straightforward language that avoids confusion or unnecessary jargon. A reply device can also be persuasive, restating the appeal or adding motivating messages that reinforce why the gift matters. And most importantly, it enhances the donor experience. When giving feels smooth and meaningful, donors are more likely to return and give again. In nonprofit fundraising, a finder file is a list of names and addresses, usually purchased from a list vendor, used to reach out to potential donors. Each contact in the list is assigned a unique finder number, which acts like a tracking ID. This system helps organizations measure the effectiveness of their outreach. By tracing responses back to specific finder numbers, they can identify which lists perform best and refine future targeting strategies. Finder files are especially valuable in direct mail campaigns, where tracking return on investment and source performance is essential for success. Finder files serve a critical role in nonprofit fundraising, especially when it comes to identifying and acquiring new donors. These files include names that are not yet part of the organization's existing database, making them ideal for outreach and expansion. Each contact is assigned a unique finder number, which enables tracking and analysis. This helps you understand which campaigns or sources are most effective in generating new donor responses. Importantly, finder files are kept separate from the organization's house file, meaning they're only merged once a person makes their first donation. This structure allows nonprofits to test, refine, and scale their acquisition strategies with clarity and precision. Finder numbers typically refer to registration numbers or tax identification numbers assigned by government agencies. These numbers are essential for a wide range of nonprofit operations, from filing taxes and opening bank accounts to enrolling in programs like Google for Nonprofits. They may also be referred to as Employer Identification Number, EIN, Federal Employer Identification Number, FEIN, or Federal Tax Identification Number, TIN. Having the correct finder number ensures your nonprofit is recognized as a legal and operational entity and helps maintain compliance, transparency, and credibility across platforms and partnerships. Nonprofit registration numbers are unique identifiers assigned by the relevant government agency, such as a charity commission or company registry, when a nonprofit is officially registered. Alongside that, tax ID numbers like EIN, FEIN, or TIN are issued by tax authorities, such as the IRS in the United States. These are essential for financial reporting, filing tax returns, and other legal requirements. The purpose of these numbers is to formally identify the organization and ensure compliance with both legal and financial regulations. To find these numbers, refer to the nonprofit's registration documents, official correspondence from regulatory agencies, or the organization's own website. Keep in mind, the type and format of these identifiers may vary by country, but their role in maintaining transparency and accountability remains universal. Nonprofits rely on four major financial statements to maintain transparency, accountability, and informed decision-making. First is the Statement of Activities. This is similar to an income statement in for-profit organizations. It shows the organization's revenue and expenses over a specific period, helping you track performance and sustainability. Second, the Statement of Financial Position. This is the nonprofit version of a balance sheet. It provides a snapshot of assets, liabilities, and net assets at a specific point in time, offering insight into overall financial health. Third, the Statement of Cash Flows. This report outlines how cash moves in and out of the organization, covering operating, investing, and financing activities. It helps in managing liquidity and planning for future needs. And finally, the Statement of Functional Expenses. This statement breaks down expenses by both function, such as program services, management, and fundraising, and by natural classification, like salaries or supplies. It's especially important for donor trust and compliance. Together, these four financial statements provide a complete picture of a nonprofit's financial status and accountability. NCOA, or National Change of Address, is a secure database maintained by the United States Postal Service. It contains up-to-date address information for individuals, families, and businesses who have submitted official change of address requests. When someone moves and notifies USPS, their new address is recorded in the NCOA database, and organizations like yours can access this information to update mailing lists. So, what does the NCOA database do? It significantly reduces returned mail by keeping addresses current and properly formatted. This means fewer wasted mailings, lower postage costs, and improved donor communication. For nonprofits and direct mail campaigns, leveraging NCOA helps ensure your messages reach the right people, at the right place, every time. PCOA is a nonprofit organization dedicated to inclusive, innovative, and integrated services that support the changing needs of older adults in Pima County. Our work is made possible by the generous support of funders, donors, and volunteers. Together, we help our community age well through a trusted network of programs and services, delivered by our knowledgeable staff or in partnership with community organizations. In all that we do, we advocate for the rights and needs of older adults. We provide information, education, and resources that empower individuals to make informed choices, live independently, and enjoy vibrant, fulfilling lives. PCOA's mission is to promote dignity and respect for aging and to advocate for independence in the lives of Pima County's older adults and their families. As one of the first aging services organizations in the nation, founded in 1967, we have remained at the forefront of innovation, advocacy, and expert guidance. For over 5 decades, we've built a trusted network of services and partnerships, from Medicare support to health and safety programs, all focused on helping older adults thrive. When you reach out to PCOA, you can count on reliable, unbiased information and a caring team committed to your well-being. The concept of a merger refers to 2 or more organizations combining their operations into a single entity, often to improve efficiency, expand their impact, or respond to key challenges. This can involve forming an entirely new organization, one absorbing the other, or transferring assets while one entity dissolves. In data management, the term merge and purge plays a crucial role, especially in nonprofit operations. Merging involves combining data from multiple sources, like donor lists, mailing lists, and databases, into one unified system. Purging is the process of cleaning that database by identifying and removing duplicate or outdated records. This includes contacts who have passed away, moved without updating information, or unsubscribed from communications. Together, merge and purge processes help maintain a clean, accurate database, improving campaign efficiency, reducing costs, and ensuring compliance with data protection laws. Benefits of the merge-purge process, an essential step in maintaining a healthy donor database. First, it leads to reduced costs. By eliminating duplicate mailings and communications, nonprofits save significantly on postage and printing. Next is improved efficiency. A clean, streamlined database makes fundraising, donor tracking, and communication more effective and less time-consuming. It also supports compliance. Regularly purging outdated or unnecessary data helps meet data privacy standards like GDPR. And finally, it ensures enhanced data quality. The merge-purge process keeps donor information accurate and current, which improves the reliability of data analysis and financial reporting. Clean data isn't just about organization, it's about smarter, more impactful fundraising. Types of mergers in the nonprofit world generally fall into 3 main categories. First, consolidation, where 2 or more organizations come together to form a brand new independent entity. This new organization combines the missions, assets, and operations of the former groups. Second, acquisition, in which one organization absorbs another. The acquiring organization takes over all assets, liabilities, and operations while the other ceases to exist independently. And third, asset transfer, where one organization formally dissolves and transfers all of its assets to another organization. This allows the receiving organization to carry forward the mission or purpose in a new structure. Each type of merger requires careful planning, legal coordination, and strategic alignment to ensure a successful transition. Here are the key steps in a merger, a process that requires careful planning and coordination. First is the letter of intent, a non-binding document that outlines the initial understanding between the merging parties. Next comes due diligence, where both organizations review each other's financials, operations, and legal details to assess risks and opportunities. Then we move to negotiation and agreement. This is where terms are finalized and the structure of the merger is agreed upon by both sides. After that, the approval process takes place. Boards, legal teams, and sometimes regulatory bodies must give formal approval for the merger to proceed. Finally, we reach the closing stage, where all legal documents are signed, assets are transferred, and the merger officially goes into effect. Each step is essential to ensure transparency, alignment, and a successful transition. The benefits of a nonprofit merger are both strategic and substantial. Mergers can lead to greater financial and operational efficiency, helping organizations streamline costs and eliminate redundancies. They also offer a larger and more measurable impact, which can strengthen your case with funders and stakeholders. By combining teams, you gain access to an enhanced pool of talent and expertise, fostering innovation and stronger leadership. A merger also allows for a wider program scope, enabling organizations to serve more people across more areas with greater effectiveness. And finally, with expanded reach and capacity comes greater visibility, helping the merged organization stand out and lead with confidence in a crowded nonprofit landscape. What is the role of a consultant in a nonprofit merger? Consultants can play a wide range of roles throughout the merger process, from high-level strategy to hands-on implementation. At the early stage, a consultant may be engaged to conduct an organizational and market assessment, helping determine whether a merger is even viable and identifying potential partner organizations. As the process moves forward, consultants often take on tactical roles, such as designing an integration plan, developing the new organizational chart, crafting a brand or naming strategy, and shaping marketing and communications approaches. They may also help align organizational cultures. A key role is overseeing financial due diligence, ensuring that both organizations have a clear and accurate understanding of assets, liabilities, and financial health. While some steps may be handled internally, especially if the organizations have experienced leadership, consultants bring outside perspective, structure, and specialized expertise to support a smooth and strategic transition. Purge is a vital process in database management, especially for nonprofits handling multiple donor lists and campaign data. As the name suggests, Merge refers to combining multiple datasets into one unified, organized database. This helps ensure all rows and columns are properly aligned and structured. Following specific merge rules ensures accuracy, consistency, and alignment across your entire dataset, leading to more reliable insights and better decision-making. The purge part of the process involves identifying and removing duplicate records, consolidating entries, and keeping only the most accurate and up-to-date information. A clean, clutter-free database eliminates confusion, reduces errors, and builds trust in your reporting and communications. With a proper merge-purge process, your data becomes not only organized, but powerful. Merge-purge is a vital process for maintaining a clean, efficient, and effective database. Here's why it matters. Improved accuracy. Duplicate or outdated data can skew analysis and lead to poor decisions. A clean database ensures you're working with the most accurate, up-to-date information. Enhanced customer experience. Receiving duplicate emails or messages can frustrate donors or customers. Merge-purge eliminates these errors, ensuring communication remains professional and respectful. Cost efficiency. Redundant data takes up space and consumes unnecessary resources. By streamlining your database, you reduce storage costs and improve overall system performance. Compliance with data regulations. Laws like GDPR require businesses to manage personal data responsibly. Regular merge-purge helps maintain compliance by ensuring data is current and properly managed. Better marketing results. Accurate data means better targeting. With a clean list, your marketing messages reach the right audience, boosting response rates and campaign success. In short, merge-purge isn't just data hygiene, it's a strategic advantage. Let's explore the key techniques in merge-purge, a process essential for maintaining clean, accurate, and actionable data in nonprofit fundraising. We begin with exact matching, identifying and merging duplicate records that are 100% identical, such as name, email, or address. Next is fuzzy matching, used when data isn't an exact match, but still likely refers to the same individual. This technique accounts for typos, name variations, or formatting differences. Rules-based deduplication applies custom logic to identify duplicates based on your organization's specific data structure and priorities. Finally, survivorship logic determines which version of the data should be kept when duplicates are found, ensuring the most accurate and up-to-date record is retained. Now, why is this so important? Cost efficiency. Removing redundant or outdated data helps save storage, reduce mail costs, and simplify database management. Compliance with data regulations. Keeping your data clean and current helps meet privacy laws like GDPR and ensures responsible data handling. Better marketing results. With clean data, your outreach becomes more targeted, accurate, and effective, leading to stronger engagement and higher returns. How to implement a successful merge-purge process, an essential step to ensure data integrity and improve campaign performance. Start by standardizing your data. Consistent formatting makes it easier to identify duplicates and maintain accuracy across your lists. Next, use advanced deduplication tools to automatically detect and remove duplicate records, reducing manual errors and saving time. Segment your lists to target your audience more effectively. This allows for personalized messaging and better engagement. And most importantly, regularly update and cleanse your data. This keeps your database fresh, relevant, and ready for action. A successful merge-purge process also brings three major benefits. Cost efficiency. Removing redundant data reduces storage and management costs while making your system easier to maintain. Compliance with data regulations. With laws like GDPR, maintaining accurate, up-to-date records helps ensure your organization stays compliant and protects donor privacy. Better marketing results. Clean data means your messages reach the right people, improving response rates and boosting overall campaign performance. A file health report, often referred to as an annual report, is a vital document for any nonprofit organization. It provides a comprehensive summary of the organization's activities, financial performance, and overall impact over a defined period, typically 1 year. More than just a financial statement, this report acts as a powerful communication tool, sharing your story with key stakeholders, including donors, volunteers, partners, and the public. By presenting transparent data, mission-driven outcomes, and meaningful achievements, a well-prepared health report builds credibility, trust, and ongoing support for your cause. A well-structured health report communicates impact, builds trust, and strengthens your organization's credibility. Here are the key components. Executive summary. A brief overview highlighting the organization's key achievements, major milestones, and overall performance. Letter from the leadership. A personal message from the executive director or board chair, expressing gratitude, reflecting on progress, and sharing the organization's vision. Mission statement. A clear expression of your organization's purpose, values, and the reason it exists. Programs and services. An in-depth description of the programs offered, the communities served, and the measurable impact created. Financial summary. An honest, transparent breakdown of the organization's financial health, including revenue, expenses, and net assets. Donor acknowledgement. Recognition of the donors who made a difference, showing appreciation for their support and trust. Success stories. Real-life examples that highlight the outcomes of your work, helping to humanize your impact and inspire others. Challenges and future plans. A look at the obstacles faced and a forward-looking plan for growth, improvement, and greater impact. Together, these components provide a complete picture of your organization's progress, integrity, and potential. Purpose of the analysis: understanding why data analysis matters in nonprofit operations. First, we focus on data integrity, ensuring the information we use is accurate, consistent, and free from errors. Next is data access and security, making sure only the right people have access to sensitive information while preventing unauthorized use. Compliance is essential. Analysis helps us meet legal and regulatory requirements, including data privacy laws like GDPR and HIPAA where applicable. It also drives operational efficiency, streamlining data management, reducing manual errors, and improving overall reporting. We also aim for transparency and accountability by providing stakeholders with accurate, accessible data that builds trust and demonstrates impact. And finally, analysis supports informed decision-making, giving leaders the insights they need to guide funding, program development, and resource allocation with confidence. Tools and techniques for analysis are essential for ensuring the accuracy, security, and strategic use of data in nonprofit operations. We begin with data audits, systematic reviews that identify inconsistencies, gaps, or errors in your data, helping maintain its quality and reliability. Access control reviews help verify who has access to your data systems, ensuring sensitive information is only available to authorized users. Risk assessments evaluate potential vulnerabilities in your data handling processes, allowing you to proactively address issues before they become serious problems. Data mapping and documentation involve visually organizing how data flows within your organization, from collection to storage to usage, making it easier to understand and manage. Finally, a strong data governance framework establishes clear policies and responsibilities, guiding how data is collected, stored, protected, and shared across your organization. Together, these tools provide a structured approach to responsible data management and strategic decision-making. Benefits of a file health report analysis go far beyond just data cleanup. They strengthen the very foundation of your nonprofit operations. First, it ensures improved data integrity and accuracy by identifying outdated, incomplete, or duplicate records, allowing for more reliable decision-making. It also promotes enhanced data security, helping to identify vulnerabilities and maintain compliance with data protection standards. Streamlined operations are another key benefit. With cleaner, more organized data, workflows become faster and more efficient. It also leads to increased transparency and accountability, as better data supports clear reporting and donor trust. And finally, it fosters stronger stakeholder relationships by enabling personalized, timely, and relevant communication with donors, partners, and beneficiaries. A file health report isn't just a technical process, it's a strategic advantage. Fundraising reports play a vital role in tracking performance, understanding donor behavior, and guiding strategic decisions. Start with the donations breakdown, a comprehensive view of total funds raised, segmented by amount, channel, or campaign. Donor reports offer insights into giving history, frequency, and engagement across your donor base. The Top Donors Report highlights your highest contributors, helping you prioritize stewardship and recognition. The First-Time Donors Report tracks new supporters, giving you a chance to welcome and nurture long-term relationships. With the Recurring Donors Report, you can monitor sustained giving patterns and identify your most loyal supporters. The Top Campaigns Report reveals which fundraising efforts are generating the most impact, both in engagement and revenue. A real-time activity report keeps you updated on donations as they happen, ensuring transparency and immediate insights. And finally, the Liebunt-Seibunt report helps you identify lapsed donors, those who gave last year or some year, but not this year, offering valuable re-engagement opportunities. Together, these reports empower you to measure success, adjust strategy, and build stronger donor relationships. Thank you for completing the final module of this training series, Advanced Fundraising, Mergers and Compliance. In this session, we explored the complexities of modern fundraising, strategic mergers, and the importance of staying compliant in today's regulatory landscape. With this, you've completed a comprehensive journey through every stage of nonprofit fundraising, from foundational strategies to advanced insights and analytics. Your dedication to learning and growing in this field is what drives real, lasting impact. Thank you for investing your time, your energy, and your passion. We wish you continued success as you lead change, build trust, and move your mission forward with confidence, clarity, and purpose.